Now let's look at Nigeria's fixed income market at this time. As the month of October's ended, we saw that the NGX, well, recorded a negative for the end, even though, our guest during business morning had said that there were some positive moves right there. Even though Aradel, that was supposed to be a baby of the house, to drive the market and boost the market cap, did bring record some retreats from investors. But let's look at the fixed income market this afternoon. We're doing that with Dimeji Obasa, joins us virtually from Lagos. Hi, Dimeji. Good afternoon.
Good afternoon.
Yeah, so let's look at the month of October just ended. I know we're still computing the data for the month. Perhaps by next week we will get all of that. But from your daily dealings, how would you describe the fixed income market for the month of October?
The fixed income market for the month of October, I'd say, was one where we had reduced activity. And this was as a result of the low levels of money market liquidity in the system. However, we did note some periods of strong demand, particularly on the bond side. After the bond auction, we saw a significant rally in the fixed income market for bonds. Just to give you context, the two bonds that were on offer at the auction were the 2029 and the 2031. We saw the bonds close at the auction at 20.75 for the 29 and 21.74 for the 2031. And we saw those bonds trade very bullish, and they closed the month at 20.2 for the 29, and the 31 closed as low as 21.1. So despite the low levels of fixed income trading activity, we still had some periods of bullish sentiment within the month where we saw strong demand.
Yeah, and then I remember, I think at the beginning of the month, there was the expectation that yields would drop since there was a lot of activity in the second quarter. But I don't know if that was sustained, the fact that yields were still high at the beginning of the month.
So that expectation that yields would drop did not materialize fully. And that is because, again, throughout the month, money market liquidity was tight. So we didn't see that aggressive drop in yields that some market participants had expected going into the month.
So based on this, what are the expectations for the month of November? How much participation from the government can we expect?
So for now, what we can be sure of is that we would have at least one bond auction in the month of November. And also we should have 2 treasury bill auctions in the month of November, where the government will be, through the DMO, will be looking to roll over some of the maturing treasury bills in the month of November along the 3 standard maturities. That's the 91, 180, and 364 days treasury bills. And then also we expect that the 2029 as well as the 2031 would also likely be on offer at the bond auction that's scheduled to hold later this month. In terms of trading activity for the month, we expect it to still be very similar to what we had last month, because we don't expect there to be significant trading volumes and activity. We just see that maybe we probably would have some short periods of buying pressure, but overall, for the month of November, the outlook is bearish.
What about foreign participation in the market? I know the treasury bonds were really attractive to them. How was it in October, and what can we expect in November?
Overall, foreign participation in the fixed income market has been strong this year. In last month in particular, we've had significant participation, particularly on the shorter end of the curve with the treasury bill space. So the CBN had 2 OMO bill auctions last month, and we saw a lot of participation from the foreign portfolio investors. The CBN was able to raise about 905 billion at the first OMO auction, and then another 731 billion. And we've seen significant secondary market trading activity for those OMO bills amongst the foreign portfolio investors. For this month, we expect that we'll continue to see the same levels of offshore participation in our market, but it's not very clear whether or not we're going to have the CBN come into the market to issue new OMO bills at this time. But for sure, we expect that the foreign participation will continue to remain high in the market going into November.
All right. So, as a player in the market, speak to us about the effectiveness of these instruments in the policy roadmap of the government. You know, in liquidity, squeezing out liquidity from the economy. We just saw the M3, money supply, and it doesn't feel that, we're really feeling the impact. But you are there firsthand. Tell us how effective these instruments have been, the OMO, the treasury bonds, and all of that, in squeezing out liquidity and actually getting us to a level that, the economic policy is leading.
Yeah. So this high interest rate environment that we have is as a result of the CBN trying to fight inflation by mopping up money from the economy. As you know, when rates are high, typically what would happen is that individuals, corporates, in the economy as a whole would look to save more as opposed to consuming. That's just like what the economic principles say. And we've seen that play out, really. As a matter of fact, this year alone, we've seen significant participation among retail investors in the fixed income market. Compared to last year or the year, for treasury bills, you could get as high the long end of the treasury bills curve. And that has been very attractive for retail investors. And we've seen them come into the market very actively to participate.
All right, Dimeji Basa, thank you so much for sharing your thoughts and time with us this afternoon.
Thank you.